Good afternoon, everyone. Thank you for joining us here today. I'm Jamie Parrott, Chief Operating Officer of MedResults Network, and we're delighted to have you on today's presentation. For those of you who have been with us in previous webinars, this is a little bit of a different format in that all of our other webinars, whether they're business or clinical, of course, we encourage you to engage with us or follow along. But for this presentation, I really want to encourage everyone to not just follow along, but actually have your statements with you and do the work as Joe, our guest speaker, goes through 3 of the ways that you can identify red flags on your credit card statements. So Joe Kraljev, he has been a partner of ours for a couple of years. We have personally known him in this industry for several years, and he's become what I would call an expert in the aesthetic medical space where it comes to merchant processing. So we're excited to have him here today. Again, I encourage you to take out your credit card statements and follow along with Joe as we move forward. I also want to bring your attention to your webinar dashboard. I'm going to put up a link. So if at any point you want Joe to take a look at your statements for you or after the presentation, you can always click the link. It'll take you right to our fillable form where you can upload your statements for a quick analysis from Joe. So anyway, without further ado, enjoy the presentation, and I'd like to introduce our partner, Joe Kraljev.
Thank you, Jamie. Hello, and thank you for joining today's webinar. If you are logged into this webinar, the information I am about to tell you will save you thousands upon thousands of dollars, if not tens of thousands of dollars a year in reduced credit card processing fees. A little bit about myself. My name is Joe Kraljev. I am the founder and CEO of Members Only Processing, which is a subscription-based credit card processor. I've been in the industry for a little over 6 years now. I've analyzed thousands of statements, and don't feel bad if you don't understand your monthly credit card processing statement. There are more than 5 deceiving pricing models, and it's very hard to understand the fees. With that being said, before I get started and showing you the 3 red flags that you need to look out for, I want to show you the one transparent model that exists in credit card processing. So I want to show you what your statement should look like, and I want you to understand, just like any other business, credit card processing has a cost to it. There are many different rates and fees for Visa, MasterCard, American Express, and Discover. A lot of business owners think there's just one rate, and that's just not true. There's hundreds of different rates. Depending on who your provider is and depending on which pricing model you are, is whether or not you are paying the cost of those transactions or if those bank fees are being inflated to a much higher rate. Companies like Square and QuickBooks and any company that offers one flat percentage, what they're doing is they're taking all of these rates and they're inflating them to a much higher rate. This is an interchange plus pricing model that we only offer. This is one of the statements from one of our members. As you can see, there's many different line items from MasterCard, Visa, and Discover. All right, so I just want you to understand that. There's not one rate for Visa, there's many. Same goes for MasterCard and Discover. Next, I want you to understand that Amex rates don't have to cost a fortune. A lot of business owners are paying 3% for Amex, and some choose not to accept it. That shouldn't be the case. When it comes to healthcare, these are the Amex rates. And Amex, American Express, works different than Visa and MasterCard. When it comes to American Express, it has to do with the size of the transaction. So in healthcare, if the transaction is less than $150, let's say $140, the cost to process that transaction is 1.55% and 10 cents per transaction. Okay, so if the cost of that transaction is less than 150, this is the rate, 1.55%. If that same transaction was hand keyed, typed in over the phone versus swiped, that cost would be a little more. Down here, it would be 1.85%. Now, if the transaction is over $150 and less than $2,000, the cost is 1.85%. That's if it's swiped or if the chip is inserted. Okay. If it was hand keyed, the cost would be 2.15%. If the transaction is north of $2,000, the cost of that transaction is 2.3%. And if it was hand keyed over the phone, the cost is 2.6%. So the AMAX range in healthcare range from 1.55% to 2.6%. This is important to know. Many people don't know that there's all these different rates and breakdowns for American Express. So in the last slide, I showed you there's many different rates and fees for Visa. I showed you that there's many different rates and fees for MasterCard. And now you understand Amex has its own tiers of rates. Next, I want you to understand regulated debit. This is very important. If one of your patients pays you with a regulated debit card, it's like they're paying you with cash. The cost is very cheap. It's 0.05% and 22 cents per transaction. A lot of credit card providers don't pass this cost down to the business owner. Instead, they charge the credit rates and keep the difference for themselves. Let's see what that amounts to. This is one of our members. They're a plastic surgeon. This is a snippet from their statement. This plastic surgery practice accepted $238,775 just in regulated debit cards. It cost them $138 to accept. Think about that. They paid $138 to accept close to $240,000 in credit and debit cards. If this practice was with Square or with QuickBooks or paid a flat 3% to any provider, this one line item would cost over $7,000. Wow, think about that. So it's very important to be on a pricing model where you're paying the cost of the cards being accepted and not inflated. Okay. Now that you understand there's many different types of rates and fees for Visa, MasterCard, and that Amex has its tiers, and you also understand the cost of regulated debit, let's go into the 3 red flags. Red flag number 1. This is easy to spot out. As I just showed you, there's many different rates and fees. Companies like Square and QuickBooks, they just inflate them all to 3%. That's why the stock price is trading at $235 a share today, right? So if you see on your statement qualified, mid-qual, or non-qual rates, what your provider is doing is they're bundling all of these rates into a much higher rate. Would you rather pay 0.05% for regulated debit, or would you rather pay 1.21%? It's a no-brainer. So take a look at your statement. If you see any of these terms, qualified, mid-qual, non-qual, that's one flag. And it could appear in different ways. I took a snippet of another way. It could be buried in a line item on any of the pages in your statement. Here's another example, mid-qual, non-qual. You're basically just wasting money if you're on this model, okay? That's flag number 1. Flag number 2. This is page 1 of a statement. This business owner paid $5,945 to accept $177,000. This is in their contract. The contract says they're going to pay 40 basis points on total volume. The provider's showing that they are profiting $709 out of the $5,945. Okay? But when we dive into the statement, this is red flag number 2. Okay, so they don't have any qual, non-qual, mid-qual. They don't have any of those terminologies, but this is another way providers make more money off their client's account. You see this 10 next to each line item? Those are just extra fees added on top of the cost of those line items. So if you see a breakdown in your statement, it looks like this, and you see any number in parentheses, it could be 3, 4, 10, doesn't matter. you're paying more than what that line item cost. Another thing that this statement has is the math doesn't add up on these line items. Doesn't make sense, I know. So I broke down these two line items for you. As I showed you, American Healthcare Tier 2, the cost of that is 1.85%. If you times it by the volume, the cost of this line item should have been $224. Instead, they were charged $346. Savings on this line item is $122. Let's take a look at this line item. The cost of the healthcare tier 3 is 2.3%. You times it by the volume, the cost of this line item should have been $1,447. Instead, they were charged $2,077, over $600 in savings just on this line item. So just between these two line items, there was an extra $700 in fees. Okay. Let's go to red flag number 3. You don't want any STDs in your statement. If you're with the provider that's breaking down all the line items for you, this is what it would look like. US, VSP, STD. This means that the hand key transactions are downgrading, costing this business owner a lot more money. When you're hand keying in transactions, it's very important that you put in all the necessary information and batching out that same day. If you miss a certain piece of information, that transaction will downgrade. This was one of our members, and when we sign up a new member, we make sure they know what information to put in so that all the cards qualify at the lowest rate. After 6 months, we took a look at the statement and we realized this line item. I called up the doctor. I said, what's going on? What changed? And he's like, I don't know. He's like, talk to my practice manager. I said, okay. It was a new practice manager that came in. And when I spoke to her, she implemented a new strategy on over the phone or hand key transactions, leaving out certain information. We flagged it. We called her. We fixed it. This mistake cost them $600 for the month. Now, if you think about that, if nobody's watching this stuff, this would have went on for as long as this practice would have been in business. You're looking at $500, $600, $700 a month being completely wasted. Okay, so you don't want any STDs in your statement. Those are the 3 red flags that anyone could quickly take a look at their statement and see if they're on it. And to summarize what we just spoke about, if you're processing with Square or QuickBooks or paying a fixed percentage like 2.5% or 3%, you're paying the highest rates. Okay, you don't want any qual, mid-qual, or non-qual rates in your statement. Look to see if there's a parentheses with a number next to any line item. A lot of times the math on line items do not add up. You could Google the line item, you can see what the rate is and do the math yourself. I understand a lot of practices want integration, and that's fine. If you want integrated with your EMR or POS, we can still help you out. We could still give you advice on what to do to pay lower in fees. Just send us your statement and we'll be happy to do that audit for you. Okay. I hope these 3 pieces of information was helpful to you. If you avoid paying these, it will save you thousands of dollars. In about 2017, I wanted to create a payment model for business owners that eliminated all of these headaches. We created a subscription-based payment model. Instead of charging a percentage of your total monthly sales, we charge a flat $1 a month. Okay, and we pass down the cost of cards being accepted. If business owners are processing less than $20,000 a month, they go on our $49 a month plan. So if you're processing less than $20,000 a month, you go on our $49 a month plan. And whether you process $5,000 or $20,000, we charge you $49, and you pay the cost of cards being accepted. If your business is doing between $20,000 and $80,000 a month, you go on our $99 a month plan, and you pay the cost of cards being accepted. Business owners processing north of $80,000 a month, we start at $149 a month. So this is a subscription-based payments model that we have a lot of members on, and they are saving a lot of money. On top of handling transactions for a flat monthly fee, we also provide monthly or quarterly savings reports. I like to do this because I like to remind our members how much we're saving them. I also like to do it because it forces me to review their statements monthly or quarterly and check for red flags, primarily cards being downgraded, because we wouldn't do the other two red flags. We took the average savings for all of our med spas in 2020, and the average savings was $658 a month, or a total of $7,896 for the year. The average savings for our plastic surgery practices was $1,468 a month, or a little over $17,000 for the year. With us, if you want to enroll in our subscription-based payments model, there are no contracts, and you never have to negotiate rates ever again. If you take a look at these testimonials, you're not going to see them with any other provider, and I'm going to explain why. When we give an estimate, if we send us a statement and you want to enroll in our subscription-based model, when we give you an estimate, we lowball it. We give you the lowest that we think we could save you. So in Dr. Mills's case, I told him, listen, I could save you $400 a month, which is great. But in his higher volume months, because there's no provider taking a percentage of all of his transactions, he gets to keep that money. So in his higher gross months, he saved as much as $1,200. With any other provider, the provider keeps that difference, because the more you process, the more they keep, the more they make. On our model, the more you process, the more you get to keep. In Dr. O'Toole's situation, we told him, listen, I can save you $600 a month. He's like, great, sign up. In his higher gross months, we saved him as much as $2,300. For Dr. Zanis, we told him $1,400 a month, and his highest grossing month, $3,200. Dr. Gladstone had his credit card processing integrated. I forgot with which EMR system. When I told him how much we could save him, he decided that not having the integration and keeping the money for himself was worth it. So he switched over to us. He's saving a little over $7,000 a year. So I think it's up to you. I think it's a case-by-case basis with whether or not you need the integration with EMR or POS system. Everyone has a different story. Again, thank you. I hope this was somewhat informative to whoever's joined on this webinar. This is my information. Feel free to reach out to me at any time. If you want me to take a look at your statements for you, this is my email address, joe@membersonlyprocessing.com. You could fax statements to 212-634-4228. I will be more than happy to analyze your statements for you, give you advice that you could take back to your current provider to try to get a better deal for yourself. Or if you're interested in enrolling in our subscription-based model and want to see if that makes sense for you and your practice, feel free to reach out to me.
Thank you, Joe. We did have a question earlier on in the presentation from one of our members who asked, what is regulated debit, or what are regulated debits?
Cool. So regulated debit, it's different than a credit card. Credit card, regulated debit comes right out of your bank account. So when you use your debit card and it's like PIN debit, you put in your PIN, it comes directly out of your bank account, versus a credit card where you pay at the end of the month. That's the difference between regulated debit and credit.
Perfect. Now, we appreciate you answering that, and I hope that answered your question. Just to close, again, we want to thank our participants today and everyone who joined us. And if you're tuning into the recording, please feel free to connect with either myself or Joe. We'll be happy to help you. Again, I think the takeaway for today is take a hard look at your statements and see if you can identify those 3 red flags that Joe went over during the presentation that could save you thousands of dollars. And we encourage you to go through and you could submit your statements to either MedResults or Joe directly. He will take a look and tell you maybe where you can improve. And as a complimentary, I guess, analysis for MedResults customers, I can tell you Joe's taken a look at a number of different statements for our members. Some he's come back and said, you're doing great, but this one line item could be removed. And he's just simply helped them to renegotiate with their existing processor. And of course, many of our other members have moved over to Joe's services. But either way, We thank you again for attending, and we hope we'll see you on our next presentation. Take care and have a great afternoon. And thank you so much, Joe.
Thank you. Thank you for having me.
Bye-bye, everyone.
Bye-bye.